not only is crypto offering them an opportunity, but we're seeing the rise of the speculative economy. And we're seeing it in prediction markets. We're seeing it, the rise of Robinhood. Robinhood's growth is extraordinary, what's going on, as people are realizing that speculation is somewhat warranted because they have no other way around it. But it also leads me into, well, the good thing that speculation is doing is testing all these things in crypto, these new ideas. They get tested like memes, which is like capital formation, instant capital formation. And also humans, if we're not in a job, we'll probably still speculate because it's fun.
Hey guys, welcome to Everyday Finance. Recently, there was a significant correction in the worldwide cryptocurrency market. Ethereum dropped more than 6% to over $3,450, while Bitcoin briefly dropped below $113,000, losing almost 3% in a single day. Significant losses were also seen by well-known cryptocurrencies, including Chainlink, Solana, and XRP. Profit-taking and increased fears about U.S. tariffs were the main reasons for the liquidation of over $630 million in long positions in a single day. Strong inflows into spot ETFs and steady dip buying indicate that investor interest is still high despite this short-term volatility. The larger bull market structure, according to analysts, is still in place, and this might just be another shakeout before the next significant upward surge. Raoul Pal, a market expert, thinks the current crypto cycle is still in the middle stages rather than nearing its conclusion. He claims that the actual market peak won't occur until retail investors, affluent individuals, institutions, and family offices are fully involved, and that institutional demand is just now beginning to ramp up. With Wall Street starting to tokenize assets on Ethereum's blockchain and aiming for a fair value of about $15,000. Pal believes that Ethereum is drastically undervalued. He is also optimistic about Bitcoin, believing that if the Fed begins to loosen monetary policy, it might surge to about $200,000. Pal discusses his belief that both Bitcoin and Ethereum are still in the early stages of their long-term growth trajectory in the video.
Yeah, I do too. I don't see a world in which they can't. And it's now an open admission that the debt financing is the entire focus of the government, and it's everybody's thing. It's all it is now, is that whole everything code thing that I talked about a long time ago is now openly discussed. I mean, even Trump saying, "Oh, just fuck it, we'll just sell more bills until we can get rates down, and then we can try and roll it out." I mean, this is the government, US government, basically saying we're just in a debt refi cycle.
Yeah, and again, if you go through the stages of this year, okay, we don't care about the stock market anymore. Main Street's been hurt. Okay, well, that worked for a while until you realize that's not going to work. Okay, we're going to put massive tariffs on the world. Okay, that's not going to work. So you try to find some middle ground. And the reason I say things don't work, especially in the tariff situation, you start, just like with Lehman Brothers, you start realizing the world is interconnected. And if you shut off and you attack China, then China says, well, good, we have rare earth. That means you're going to be at a military disadvantage. You're going to be at a technology disadvantage. You're not going to be in a position. You guys made this decision. So the only alternative to me is to continue the debasement and try to force nominal GDP above rates and make a bet that inflation's not going to pick up. You and I, have talked a lot. I think we differed to some degree on inflation for this year. You've been right so far, and now I've kind of jumped back into the part about how I think when the middle person in the country is having a hard time, and that's the way I view it, inflation is based, in my opinion, on the middle person. If demand isn't good enough, then you've just got a problem. And I think we're seeing that not just in the U.S. German inflation's come out. It's back down to where it was in 2019. Like everything around the world seems to be more of a deflationary situation. And I don't think this is from AI yet. I just think this is from the distribution of wealth problem and the fact that the money's run off, and the only people that have money are the ones benefiting from asset prices. So it gets me back to when I visited your conference, the first crypto conference I went to and participated at. I got to meet a lot of people that are in that middle demographic and that went to school. They have the debt. They just can't grow their way out of it, and they view a life of boredom and they're looking for more excitement. And that's why I continue to focus my attention not only on AI, but the eventuality of crypto and Bitcoin, which is starting to accelerate. So
the other side, I think you and I have probably talked about this in the past as well, is given that cohort of, let's say, 25-year-olds to 40-year-olds now, that older Gen Z and core millennial cohort who are in this trap, they're deep in the middle of this trap. Not only is crypto offering them an opportunity, but we're seeing the rise of the speculative economy. And we're seeing it in prediction markets. We're seeing it, the rise of Robinhood. Robinhood's growth is extraordinary, what's going on, as people are realizing that speculation is somewhat warranted because they have no other way around it. But it also leads me into, well, the good thing that speculation is doing is testing all these things in crypto, these new ideas. They get tested like memes, which is like capital formation, instant capital formation. And also humans, if we're not in a job, we'll probably still speculate because it's fun. I don't know. There's a big rise of this speculative economy. I think is a big mega trend that people don't really see. They're too cynical.
All you have to do is go to the Fred database and look at the chart of gambling as personal consumption expenditures of gambling, which is now over $200 billion a year in the U.S. And it's a perfectly linear incline. And then you go and look at how much money is spent on new cars in the U.S., and that is on a decline. And the numbers right now for new cars, personal consumption expenditures, are below $250 billion. And I'm sure after the tariffs, they'll be even lower, which means gambling is just taking over as a major, major part of the economy, which I think everyone knew because they can see it on TV. They realize there's, fan duels everywhere. But I don't think people have gotten to the point of why. And I do think it is a very major thing for younger people because of the boredom. It's a form of education. They view experiences completely different than we did. And at least they have a chance of getting money, where if they spend money on an expensive dinner, it's just lost. And so I do think crypto falls into that. I do think needing real-time information, real-time pricing, doing things when you want, it all fits in with a faster world and settlements of money, everything. So I do think it's a representation that the world is getting faster and that matches AI. But I also think it gets into the boredom and the anger that people are having towards not being able to enjoy their lives the way they would want.
And when you look at the crypto landscape in terms of the adoption now, what we're seeing, all of these corporate treasuries, what does it mean to you?
So I think this year and really the last, I want to say 18 months, has been about accepting a gradual acceptance of Bitcoin as something which will be here 5 to 10 years from now. So I think
remember when we first met, you were still struggling to explain to traditional hedge fund people and finance people that this was meaningful, and they thought Geordie was a nutcase. And now suddenly everything's changed, right?
Raoul Pal's analysis of Ethereum demonstrates how Wall Street is beginning to acknowledge the institutional importance of cryptocurrencies. Ethereum, which was once thought of as merely another Layer 1 blockchain, is now the foundation of tokenization. For real-world assets, due to Ethereum's legal acceptance in the United States and its impeccable uptime recorded, hasn't experienced an outage in more than 10 years, which banks greatly value. Major financial institutions are rapidly constructing on it. Based on revenue models such two circles, Pal thinks Ethereum's current fair value may go as high as $15,000, while others believe that competitors like Solana or Sui are gaining headway on Ethereum. Pal argues that the cryptocurrency's infrastructure level, dependability, and regulatory clarity offer it a sustainable edge in the upcoming adoption wave. Additionally, he is optimistic about Bitcoin. Seeing the recent price stabilization above $100,000 as a strong base rather than a ceiling, Pal claims that organizations are approaching Bitcoin as a long-term asset rather than a speculative gamble, by gradually amassing it through regular allocations. He believes that global liquidity conditions will play a major role in driving the market toward $200,000 to $250,000. He thinks that Bitcoin's next significant rise would be triggered if the Federal Reserve changed its monetary policy from tightening to easing later this year. Pal also suggests that pessimism might be hiding a far larger trend. By drawing a link between the current cryptocurrency advance and what he refers to as the most hated V-shaped recovery in stocks, both Bitcoin and Ethereum may see rapid growth. If the Fed relaxes and people's willingness to take on more risk increases,
Everything
you
is
are in that
changing.
case, but that's separate.
Yeah, that's completely separate. Bitcoin's being accepted more and more every day. What is not being accepted at this point, and actually this is a good place for us to talk a little bit about it, because I've said this on my YouTube videos. This feels a lot in the altcoin world like the post.com bubble to me. It feels like there's a lot of people that got involved. So think of the internet from 95 to say 2000. A lot of people joined into it. They left banks. They got involved and they were hoping to make tons of money. It was a free thing. Everyone got involved. And then you had this big fall. And it took a while to come. It took a while for the NASDAQ to get out of the problem. And one of the reasons it took a while to get out, just like it was in Japan with all of the banks owning shares of, everything about this overhang of people that had gone into something. Every time anything goes higher, there seems to be a wall of supply that stops it from the crypto community. Now we've got circle enthusiasm. So we've got people focus a little bit. You got Coinbase back up to the highs. So I'd say the traditional finance world is getting a little bit more excited. Now you've connected, in the last week, you've connected, CoreWeave and Core Scientific. So now we're getting some of the Bitcoin miners back involved. All of a sudden, the traditional finance world is starting to see things. I have said publicly, and I will continue to see it until Ethereum breaks out. Because of the network effects on stablecoins, which I think is there. Until Ethereum breaks out, just another OG of one of this, and people start getting on board, I don't think we're going to have the kickoff to what I believe will be the end of the dot-com bubble overhang. And I think that's what we have in crypto from the 21-22 period. A lot of overhang. It seems like there's a lot of supply. And once we work through it, I still believe there's going to be a short squeeze in the entire space this year.
Yeah, I think you're right. And the ETH breaking new highs is probably also Solana breaking new all-time highs because it hasn't broken where it was. And that is a mass wealth generation event. There's a lot of people involved in this. There's a lot of fortunes to be made, and that creates a whole new cycle of reinvestment and opportunity risk-taking and stuff like that. Yeah, I totally agree. And it feels like it's coming. When that is, I mean, most of my work suggests that, this year should continue and maybe even the first 2 quarters of next year continues. Here's a question I want to ask you. One of the things that we have done the work on is that, and this won't surprise you, the main driver of alt season, as you call it for the smaller stocks, is actually the business cycle. And the business cycle is the same driver as small caps versus big caps. It's EM versus that. It's junk versus, it's always the same trade, because once the business cycle picks up, people have earnings, they go further out the risk curve, it gets reinvested. Why has the ISM remained so low? I mean, you and I have looked at this forever, for our whole careers. This is the longest period below or at 50 in the history of the ISM. What is all this about?
So I remember Julian and I sat next to each other at dinner before the event, and you've heard me say this. In fact, I remember when I saw.
I know there's no business cycles. I get that.
Correct. So here's the part that I'll say though. It is the problem that in a world where artificial intelligence is coming, there should never be a time that the ism takes off. It just shouldn't happen, in my opinion. Now, I'm going to change that a little bit because I do think we're getting closer and closer to something which is related to the business cycle of AI. Because at the end of the day, if I equate all cycles to power, meaning you have to be building something, and oil has always been, it's that macro piece that offsets and is out of control of monetary policy and fiscal policy. You need power. That is the thing that needs to fuel it. And AI consumes an enormous amount of power. And we are going to start to see well, it's ironic I say this to someone in Spain, but we're going to start to see important blackouts. And there's going to be more of them in the US. And I think they're coming very, very soon because I don't think people have looked at the exponential move. And this fits into the alt season side to me. So I believe we are going to see a change in the business cycle. I just don't think they exist in the push button way that they did, where you do something in the economy and it goes. But I do think it's coming this year because of what's going to be needed for the infrastructure build out on data centers, on power. These are massive numbers, nuclear. This is going to be a change. I just think it's going to be financed by the government.
And also, to your point earlier, the middle American, the median person, has had their mortgages up here, their car payments up here, their credit card payments here. They're still like this.
Yeah.
Right? The stock market goes up, a bunch of rich people get richer, and sure, their pension plans might be going up, but that doesn't make a difference to their pocketbook. And the moment they start cutting rates, allowing rates to fall, people can refund their mortgages and the money will flow.
Raoul Pal's prediction is in line with an increasing number of seasoned market observers who think the current crypto bull cycle is still in its early to mid stages. Strong foundations and positive macroeconomic trends are the foundation of his optimism in both Bitcoin and Ethereum. Because of its crucial role in asset tokenization and its clear regulations in the United States, he views Ethereum as a crucial institutional-grade platform. Pal thinks there could be a significant breakout in Bitcoin, particularly if the Fed decides to loosen monetary policy soon. Raoul Pal's viewpoint is unique since it aligns with a larger macro framework that many leading analysts currently use. Pal, the creator of Real Vision and a senior executive at Goldman Sachs, has distinguished three distinct stages in this cryptocurrency cycle. Phase 1 lasted until the adoption of spot Bitcoin ETFs earlier this year. Having started in late 2022, we are currently in Phase 2, which is characterized by expanding institutional acceptance and rising prices, but also by volatility brought on by policy risk and macro uncertainty. Pal refers to Phase 3 as the parabolic stage. He anticipates that this will begin in the fourth quarter of 2025 and continue through the first half of 2026. Retail mania. A more accommodating Fed ETF inflows, the growing adoption of technologies such as AI and tokenized assets could all contribute to this stage. Pal is currently cautioning that over-leveraged posture. Seasonal weakness and a brief decline in liquidity could lead to a significant fall in August. But he sees this as a last shakeout before the cycle's most explosive leg starts. In Phase 3, Pal believes Ethereum might reach five-digit territory and Bitcoin would soar to between $200,000 and $250,000, both of which might significantly surpass prior all-time highs.